If you had 50,000 right now, what would you do? What would you invest in? That's a question I received recently, and that's what we're going to talk about today. What would Signe and Michelle from Investing Mastermind Podcast, what would we do in case we had 50,000? What would we invest in? What would we do? And my name is Signe Lonholdt.
And I'm Michelle Marki.
So today we're going to talk about how would we invest if we had a chunk of money? How would we invest it in today's market? And, for me, this episode would be pretty short because I can tell you I would not necessarily invest 50,000 right now. I would keep them in the bank. I know it's never be in cash, always be invested. But if I had 50,000 that was earmarked investing, that I could, of course, I have a savings account for in case the car breaks down and need repairs, or if there's anything on the house that need repairs. But if I had 50,000 in savings, I would keep them in my bank account. Michelle, what would you do? Let's kick this off. I'll dive deeper into what I would do, but just a quick one. I would leave them in the bank. What would you do?
Yeah, like right now, it's summer of 2026, and the markets have been close to their all-time highs. It's difficult to want to invest that right now, but maybe something I would consider doing if I just had $50,000 lying around, not doing anything much, is a combination of what you mentioned, have some of it in a high yield savings account. Like I think the best we're able to do right now is roughly 3.75% in a high yield interest savings account, like an online bank. And I'd probably put some of it there. Maybe I'd invest some of it in Berkshire Hathaway B stock right now, because unlike a lot of the market, which is really high in valuation, Berkshire Hathaway is generally reasonable. So I think that's another place I would consider investing my money right now if I had to invest in the markets. A lot of people who don't pay attention to whatever the market is doing, they just continually invest in the S&P 500 index fund, which some people could do also if you just want to set it and forget it. And even if the market's at all-time highs, you could just do that if you are feeling impatient and you just want to invest it in something. That's not what I would do. I wouldn't invest in S&P 500 index fund right now, but people have done that, and sometimes it's fine. Sometimes you're buying at the highest of highs or the lowest of lows. And since you can't really time the market, it is what it is. So those are some ideas of what we could do if you just have $50,000 right now and you don't know what to do with it.
I can tell you, I wouldn't even put it in the S&P 500. I know that people are saying, oh, it's so safe. But if you had invested in the S&P 500 in November of 1999, you still wouldn't have made money from the S&P 500. And this is adjusted for inflation. So for 26 years, you wouldn't have made money if in November you would have invested and said, oh, today I'm going to start investing and I'm going to put my money in a index fund like S&P 500 because that's what I heard you should do. They did not make their money back yet 26 years later. When it comes to ETFs, there's this thing that's called a lost decade, and it's happened multiple times throughout world history. And right now we're just in that period of time where the stock market is so high, where the S&P 500 is so highly valued if you buy into that index, that potentially for a decade, in this case, it's more than a decade, almost 3 decades, you wouldn't have made money adjusted for inflation. So it's just something to be aware of, that it's not just throwing your money in the market. So for me, when I say I would just leave them on a bank account, I would be ready to invest, but I wouldn't necessarily do it right now. There are businesses that are undervalued, like where they're trading at a price that's much lower than the actual business value, like companies like Lululemon and other companies, the Danish company Novo Nordic, in that range right now. And I'm not saying you should buy, you need to understand those businesses before you just go ahead and buy any stocks. And also, I am invested in Lululemon. I have to say that. I'm talking about that, and I'm not saying you should do it, the listeners out here. So there are businesses that are undervalued. And of course, you can put your money into those. I wouldn't do it right now because when I was at the Berkshire Hathaway meeting, usually at the Berkshire Hathaway meeting, just for context, people are always talking about the next market crash. And it's the nature of this type of investment strategy where we're buying quality companies at a discount. That's what we're doing, like good, solid businesses, and we want to buy them at a discount. So of course, when you want to buy stuff at a discount, people are kind of waiting for things to go on sale, so to speak, in the stock market. So there's always talk of town at Berkshire. But this year, even the most optimistic investors that we know, Michelle, that are usually being super optimistic and never would ever say anything and being like, no, are now saying, okay, there's some stuff going on that is really unhealthy. Like, first of all, there's a bubble with AI, tech, and also to some extent, any war-related or defense-related stocks are also highly overvalued. So there are some bubbles going on. The S&P 500 is in a bubble, but there's also some unhealthy behavior when it comes to private equity and as well as private credit. So there's a couple of bubbles going on, and now people are starting to say, oh, it's not looking good. You're not going to be able to poke much before it's going to burst. There's not a whole lot of wiggle room these days. And that's why I'm thinking right now it's good to hold on to 50,000. And then once stuff happens, that's when we will spend those 50,000 on some good quality companies that are going to be traded at a discount. But I mean, we've been saying this for years. So, I mean, it could be years before it happens, and I could be wrong.
Yeah.
There's so much talk right now.
I mean, it's incredible. Like, I've been hearing this story of how the market was overvalued since I went to Phil Town's investment workshop in 2017. He's been saying, oh, it's overvalued. But he's been unfortunately kind of wrong since that time, almost 10 years ago, because the markets have just been charging up. So it's incredible. Like, even the late Charlie Munger back in 2021, he was saying how Costco was overvalued and it was trading around $300 a share. And it's like tripled since then. So even Charlie Munger was saying, I wouldn't buy Costco right now. But then was he wrong? Or are people just being crazy in the markets because there's nothing else to buy? And so money managers are just buying more Costco because it's a reliable, good company. And even if it's overvalued, they don't care because they need to invest in something. Otherwise, their mutual fund investors will be unhappy with them that they didn't invest in certain stocks, or like not just mutual funds, but any other money funds. Like, if you're not investing, then it's like you're not doing anything. So instead of only buying Costco when it's actually on sale, like according to the principles of the late Charlie Munger and Warren Buffett, then people are just doing whatever. And that's why part of the market is on the rise, because people are not listening to sound investing principles.
But I will also say for myself, because I totally agree on the, Phil Town has been saying it for 10 years. It's the same that I've heard also. That hasn't stopped me in the past 10 years of investing in companies when they were trading at a sale. But right now, there are businesses that I know are trading at a discount, that are quality companies that I'm not buying right now, because I am like, regardless right now, if I bought into those stocks, I'm concerned again about how long would it take potentially for my money before I got my money back if we're going to go into a period of time. And maybe it's a bad decision. I also do think there's certain companies that I would definitely potentially buy right now if it was quality and trading at a discount. And it is companies where if the world really went into a big crisis, a war, high inflation, like in the 80s, 70s, 80s, until Paul Volcker came in and kind of adjusted what was going on. So if we go into a period where it's like worst case scenario, there are certain businesses that we've seen over time will make it through crisis like this, where it's kind of like the moat Warren Buffett is talking about, the competitive advantage, where it's inflation resistant. It's a really resistant. It is things that humanity needs, like big time. We need it. We cannot function without it. If there's businesses like that are going to be trading at a discount, and I do have some businesses in mind, I would buy them. But I can tell you that my field I've been very open. As if there was a quality business that would be trading at a discount, I would buy it. Even though the moat wouldn't have been super strong in the past, I would have bought it. Now I need companies. And when I talk about moat, that's the company's competitive advantage, which means that it will survive. Right now, I'm looking into companies where they need to be able to survive a potential crisis like '08, like the 2000 bubble, something like that. That's what I would be looking into, something that humanity 100% need, not something that's nice to have, but something that is need to have. So that's also when that person asked me, I focused in on certain types of businesses, right? So I said, I wouldn't invest 50,000 right now, but if I needed to invest it right now, these are the businesses that are trading at a discount right now where I believe humanity needs this product or service. Like it is something that life or death scenario. But besides that, I would be very reluctant right now.
That's a great point you're making of like, have your list ready of potentially undervalued businesses that you would be willing to invest when the stuff hits the fan and it's time for you to deploy your money to invest. And actually, I'm already mostly fully invested. I think I might only have around 5% of my assets in cash that I could potentially invest. Some of it's like also emergency fund in case something happens, I need to buy something for the house. But barring that, I don't have a lot of money just lying around right now. So I've been mostly fully invested. Like I'm keeping a little bit of dry powder, but not nearly on the scale of what Berkshire Hathaway did with like $400 billion out of their $1 trillion market cap. They're like basically holding like 40% in cash, which is incredible. And there's a lot of other people also holding a lot of cash, but you pick and choose what you're willing to endure. Do you want to be more invested or not as invested right now? It's up to each individual investor to decide that what's right for themselves.
Yeah, and it's so funny because Mike Burry from The Big Short, multiple times he's over the past 10 years, he's pulled out of the market and said, I'm not doing it anymore. This is ridiculous. And he just did it again, where he's like, no, this is, and so he's known and in popular culture from the movie The Big Short, where that movie is about the people that actually made money on the 2008 crisis. And Michael Burry is a very well-known investor because he made a lot of money shorting the market back then. So, or a specific type of product, the subprime loan. So, and he's thrown the towel in the ring a couple of times over the past 10 years where he says, this is ridiculous. The market is ridiculous. He just did it again now. So we'll see. Because he's pulled the trigger a couple of times. Is he going to be right this time? It's a little bit about crying wolf. I know that, and we've been crying wolf as well. And when are you going to listen to it? I am situation that I've set myself up in right now is these bubbles happens every 8, 10, 12 years. It's kind of difficult to 100% identify when they happen. But if the last one happened in '08, then within the next couple of years. So for example, even though it might be from a financial perspective, I don't even know if we should unpack this now, but from a financial perspective, we own 100% of the house, which means we don't have a mortgage. So if anything happens where we need to pay electricity and all that stuff, but that is also setting, it's a choice because it probably would have been a better investment to invest in the stock market. It's just, this is kind of a long-term decision, also a little bit within the Warren Buffett style of thought that we made this decision here about the house. But also if we go into a crisis, I can deploy savings into the stock market. And I don't have a whole lot of savings to invest either stock market in case there's a crash. 100%, I am ready with my wish list in case stuff goes down and ready to deploy some of my savings there.
Yep. Well, so that answers it in a nutshell of what would we do right now in summer 2026 with our money, pretend money. That question came up in, and there you have it. Those are opinions. You can take it or leave it.
Exactly. All right. So we're coming to an end of this episode, and we'll be back in 2 weeks from now.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.